Good afternoon, everybody. I jumped the gun a tad because I wanted us to start exactly at 2:30. So apologies that I jumped the gun, but here I am. My name is Adobe Uniwinde. Good afternoon, everybody. I hope lunch was good to everybody. As you just heard, I'm the Policy and Partnerships Manager at Olon, very proud co-sponsors of this forum. I'm pretty sure everybody here knows who we are, what we do, but I have the mic, so I'll do it again in a couple of minutes. So for those who may not know who we are, Olon is an impact investing firm seeded by Shell, and our sole mission is the closing of the access to energy gap in Nigeria. We do have a focus on the Niger Delta, but we reach all geopolitical zones. And we do this by increasing access to energy products and services to underserved and unserved off-grid communities. We're also committed to creating an enabling environment for this sector to grow. For the sector to grow in Nigeria through activities such as sponsorship of this forum. Now to the crux of the matter of financing, which is what you all really came to hear about. This session will tackle the issue of access to finance and this phenomenon of international finance, international funding for African development going almost exclusively to non-African players in the sector. Why is that? Is it true? Is there a need to be more deliberate? Do we need to be more deliberate about opportunities for local players? We know the issue is not competency or capacity. Olon investees, some of whom are in here, are proof of that. And in fact, the existence of Olon is proof of that. Very short story. Shell took a risk and invested $200 million into Olon in a space that is nascent. And 5 years later, in just 5 years, that risk has paid off to the tune of almost 50 companies in our portfolio. So I'll leave you pondering on the possibilities when we take a chance on Africa and Africans, while we dive into what I know is going to be a very insightful and engaging session. And I can't think of a more qualified moderator to helm this. It is my great pleasure to introduce Mr. Patrick Okibo, the founding partner at Next Year, a multi-competency consulting firm that works with African governments to provide answers to difficult development questions, such as some that we are going to tackle this afternoon. Patrick Okibo, welcome, and over to you.
Thank you very much. Them lights. Yeah, you can take this, okay. Ladies and gentlemen, thank you for joining us to discuss one of the most topical issues that we're facing in the Africa energy market, how to unlock funding for African founders. My name is Patrick. In a minute, I'll invite my distinguished panelists to join this conversation, but I want to first of all thank Olon for organizing this session. It's further proof that the organization understands the critical issues facing Africa in the energy industry. Ladies and gentlemen, join me in welcoming Tarie Badegesin. She's Managing Director and Chief Executive Officer at ARM Harith, ARM Hill. It's an infrastructure investment company that's focused on providing private equity funds. Also join me in inviting Sandra Chukwudozie, who's a Chief Executive Officer at Salfa Energy, which manufactures, distributes, and finances decentralized solar-powered systems. Alex Obiechina, should be in the room, yeah? He's the Chief Executive Officer at ACOB Lighting Technologies, a renewable energy micro-utility company And joining us online is my brother Femi Adeyemo, who's the Chief Executive Officer at Energy Solar Limited, a Bill Gates-affiliated, venture-backed distributed utility. He should be on the screen somewhere. Okay, he will join us at some point. Yeah, Femi is there. Excellent. Okay, so let me provide a bit of a background just to shape our conversation. Startup momentum in Africa is weak when compared to other continents, at only about 0.3 startups per million. It varies from about 1.3 startups per million people in like Morocco to about 9.6 in South Africa. But when you compare that to about 43 in France, you see the big disparity. Access to capital is a significant challenge. Even as investor interest increases in Africa, most of the funding seems to go to companies led by foreign-born or international founders, and not as much to African founders. So this session seeks to understand the challenges, facing African startups, when it comes to raising capital, why African founders do not secure as much funding as their international counterparts, what must be done to address this, are there lessons we have learned in other parts of Africa that we can extend and share across the continent, then, if time permits, discuss the broader issues around financial inclusion. The process is I'll have a quick chat with the panelists, but I am also interested in the knowledge and the wisdom we have in the audience. So we open it up for audience participation. So let me start with Tarie. As someone who finances several ESG themed initiatives across West Africa, what are some of the challenges in your view, in your experience, that these African firms are facing with raising capital?
Thank you. Thank you for having me here today to talk about this really important matter. ARM Harith is a private equity infrastructure fund based in Nigeria and invests in West Africa, and he's invested in many energy projects of various business models. And I'm happy to say that about, I would say 60 to 70% of what we have done has been in backing local founders. And in fact, even in the off-grid space, many thanks to partners such as Allon, Power Africa, we actually have been able to establish a methodology to support the off-grid sector. And that has come with a lot of encouragement and capacity support from the entrenched players. But your question about what are the challenges with both financing more indigenous entrepreneurs, and what are the struggles that they have, and when, as an institutional investor, we're looking at sponsors, what is it that we're looking for, and how have we been able to overcome that with some of our investments?
Sure.
I think the way to sort of start is to think about an investment committee. And when they're looking at a deal, where does the sponsor assessment come in? And it's basically sponsor risk. And how do you manage the longevity of the investment in terms of the capabilities of these people, their technical background, but also how do you trust them? Because ultimately, trust is the foundation of any form of investment or any partnership. And so when we look at a sponsor group, one of the biggest flags is if it's a sole founder. And one of the challenges with African entrepreneurship is it tends to be very individual in nature. What we find is that if it's a sole founder, the risk is so much greater. Risk of personality, risk of any form of challenge that they might not be able to overcome. So once we see a sponsor group that has either a strong partnership of individuals that have been able to come together and are able to get along, so that means that they can confront They can confront challenges that they may face or disagreements. That's always a good sign. Another important aspect is partnership. Have they been able to work with other institutions? Have they been able to work with other, whether it's technical experts that are local and international? And then very importantly for us, given that we're not a seed stage founder, is whether they've actually been able to attract some level of capital. And that level of capital could be, of course, have they done a friends and family round? Have their family supported them? If your family hasn't supported you, then who would? And again, have you got your first institutional check? Even if that institutional check is an impact fund. And that's why it was very important for us that when we were venturing into the off-grid space, that as a private equity fund, we needed to be able to back founders that had at least taken in one institutional check and had to be accountable to someone else. So these are sort of the boxes, even though they may not be physical, but these are the mental boxes that you're checking when you're looking at a sponsor group to identify whether you can back them. And by virtue of that, we have been able to back Nigerian entrepreneurs, because there are Nigerian entrepreneurs that have been able to pull these type of pieces together. I will close because I know there's a lot to talk about. That entrepreneurship, as I see it in terms of fundraising, is like playing chess. It is a game of pieces that have to come together. And it's not about an individual, it's about how that individual pulls these pieces together and accretes toward that capital coming into play.
Fantastic. And Sandra, someone who's been able to arrange your chessboard, can you speak to us as to some of the challenges you faced? Because I assume many of the startup firms have faced some of those challenges, and how you were able to navigate them, overcome them, and raise capital to get your business to where it is today.
Hello, everyone. Is this on? Okay. Hello, everyone. I'm really pleased to be here. And honestly, what I'm going to say is going to impact a lot of founders here. And for example, in Africa, right, the biggest challenge is, as a founder, moving from ideation to startup to growth. And what you find is that there isn't a lot of patient capital that is there to fund founders. And what you find then is that as a founder, you then have to bootstrap that business because you don't have the banks that are going to invest in you. I mean, this is short-term financing, right? The banks are going to hedge their risk. So they're going to provide, collateral requirements, high interest rates, and the short term. So when you're bootstrapping that business, and it's not a bad thing because so many companies survive from bootstrapping, but in Africa, right, the continent is somewhat against you because you find yourself having to provide your own infrastructure. You're providing power, electricity, you're providing security, and so many other things. And the challenge now is how are you able to maintain your cost of operations to allow you to scale? And what you find is that you're in a rat race. It's an ongoing cycle. And even when you bootstrap that business, guess what? You're going to get taxed, you're going to get levied. And the challenge again is you are supposed to be seen as a startup company with ideas to boost your economy. Where is the support? And a founder is seen to take on different roles. And that's why you see founders. A founder is the chief marketing officer, is the HR, is the operations person. They're doing everything, right? I've been there firsthand, so I can attest to this. And the challenge now becomes when you try and raise funding with international investors, right? Because you aren't focused on your processes, right? Because you are focused on surviving, when you apply for example, a cult application, the challenge now becomes passing through due diligence because they are seeing this business, like, Tariya said, it's, a one-man business, right? And there's that risk of, is this company having the proper procedures to be able to ensure that they can actually use investor funding properly? So it's a challenge that I have seen, and even for me, myself, I've seen this a whole lot in Africa, particularly Nigeria, because I like to say that I had a double accelerator program. The first one was in a very informal market, the largest one in West Africa, called Alaba International. And what you do there is that you find a master in your line of business, and you work as an apprentice to learn how to work in that line of business. And you learn how to survive, right? And you see companies going bust in 1 year, in 6 months. And it's really challenging, and that's why this conversation here today is important, so that we begin to challenge and see how we can really ensure that we are scaling up these African founders so they aren't left behind.
So I'm a bit confused now, because when I did some research on you, I thought you lived in New York, you worked for PwC, and in a number of these firms, but you're saying you did your apprenticeship in Alaba.
Yes.
And Alaba is an open market, illiterate traders. How do I?
Okay, so let me just clarify, right? So I worked at the United Nations in New York, 2015, so I saw the future of energy unfold. I'm also, family-wise, from an oil and gas background. And for me, right, working at the UN really transformed the way I saw energy, and I saw it as having to be clean and sustainable. So coming back to the ground, for me, the conglomerates which I come from was built off this apprenticeship system. My father served as an apprentice with a master. And this company is close to $1 billion valuation. So I said to myself, in order to understand the ecosystem, I need to go on the ground and see what it's like to sell to the end users.
Excellent. Okay, so Alex, we know some of the projects you've done in Nigeria, and the challenge we have is that, if you look at the data, in 2019, only about 6% of Kenyan startups that secured over $1 million were founded by Africans. So that means about over 90% of the funds that went to companies that raised over $1 million went to international, founders. What do you think is the root of this problem?
Thank you very much, Patrick. First of all, I think the reality from my experience is, one, there is already a perception problem. From the word go, if you try to find out from funders what's going on, and people tell you, well, I don't even have a hand in it, Sometimes I don't even know what goes on with the credit committees when it gets to that level and so on. So there's a perception thing. Take away the fact that we have, also questions that arise with respect to local companies. People talk about competence and so on. I'll still get back to that. But from the word go, there's a perception thing. The fact that these guys, they're just new, they're just coming in. And I'll tell you this, right? When the launch for the World Bank $350 million stuff happened in about 2017 or 2016, then Damilola was the MD of REA, right? We were in the forefront of the conversations as mini-grid developers. And do you know what we're being put at that time? The conversation was, you need to look for 1 or 2 Eastern companies or the companies from Europe or Germany that you can be a subcontractor for because you don't have the requirements to do it. Right? Then we got on the ground and actually discovered that the reality is a bit different. So first of all, I think the perception view, we need to change that narrative. That is where we need to first of all start treating it.
Okay.
Then secondly, you would agree with me that even most of the foreign-based companies operating in Africa that seem to get a lot of these funds, right? When you trace back, look through their antecedents, you will also not divorce from the fact that there is a whole lot of support that they have gotten back home.
From their home
How
country.
many TAs have you gotten with respect to actually strengthening your business structures, capacity building, and all that?
You mean from your host country,
Yes,
from your home country?
From their host country. You understand it? Then I will now bring the issue of what my colleague, the panelist said, trust. You don't trust. I believe trust is end, right? A man from the moon will not just see Alex and just trust Alex, right? And people would often say that business, is not a game of morality. You just need to come out and play it truly be fact with the figure. My business case should make a sense, and I pitch myself to you, and you should be convinced. So why would you trust this guy's business case? Because there's a trust. So that trust conversations and issues, you'll find out that it's not about what you put on the paper. It's not how beautiful your presentation, it's not how beautiful your work is. There's a perception thing that needs to be changed.
Okay, let me pull in Femi if he's still there. Femi, if you're there, I know you've closed multiple multi-million-dollar funding rounds. Is it really a perception issue, or is it more of an information asymmetry issue? So they don't really know these businesses that you're asking them to invest in, so it's difficult to make a decision. You rather invest in what you know, who you know. It's not a racist or we don't like Africans. It's purely that we don't have the information to make the decision. Would you agree to that, or is it something more?
Thank you, Patrick. I hope you can hear me.
We can hear you.
I will first of all apologize for not being able to make it physically to Kigali, but interesting conversation this afternoon. So I think it's a bit of all what you said. But where I will come from is where Alex ended the conversation, which is indeed it's so if you look at peer influence, it's called home field. I see a lot of people in the room. And if you look at the distribution of the capital that we're talking about here, most of the capital, until recently, when we have the likes of Olon and Atari's, ARM Harris, had likely been foreign funds. And the investment committees, the investment officers, maybe some of them have not even been to Africa. So there is that tendency that most of those capital will be allocated to people that they are used to, which in Alex's words, people that they trust. By the time we begin to have, when Adobe was making the introduction, she mentioned 50 companies, about 50 companies in Holland portfolio. Holland is on the ground. The people on the high sea, they're on the ground. So they're able to understand pitch deck and the local nuances that the entrepreneurs are talking about. So where I sit, I don't think it's a case of, the investors are racist. That's why entrepreneurs across Africa are not getting the capital.
Sure.
But I will also add that for entrepreneurs, what do we then need to do to ensure that we break that barrier? Energy, I moved back to Africa, to Nigeria in 2013 after about 8 years abroad. And after 5 years of running energy, it was clear to me that if we needed to have foreign investors to be able to bring on board either on the equity side or even debt side, we need to change the few things. Yes, I had my master's degree in Europe, and of course that helped. I have 2 European investors as shareholders at energy now. My master's degree was like more or less a year. But that experience, being able to have conversations around what the streets of Stockholm look like, what does Amsterdam look like, some of those things help. So my advice for entrepreneurs would be, if indeed you have thought it through, and it is critical that you have foreign investors, it doesn't have to be the founder that will be foreign educated. You could go for advisors, even in the US, even in Europe. New entrepreneurs look for advisors that can hold their hands and help them to navigate this.
Sure.
Raising venture funds is not only difficult in Africa. It's difficult in Europe, it is difficult in America.
Thank you, Femi. You've raised some interesting points on how we begin to navigate the challenges. But let me come back to Tarie. Before the session, we started solving the problem. So maybe you can share with us again some of the thoughts you've you have on how we can navigate these challenges with African founders raising funding.
Right. And I think one of the things we were talking about before coming up here was sort of what is also happening in Nigeria, for example, in terms of there being some level of increase in capital that's going to Nigerian founders. And so to some extent, when you look at the numbers from an Africa perspective, they're very dire. But in Nigeria, you're seeing some level of a shift, and you're seeing it in tech, for example. And there's some questions as to, so therefore, what is the difference? What is driving that? And I think a very big difference between some African countries and others is the presence of an entrepreneurial class and the presence of a high net worth individual base that creates an ecosystem for seed funding. And so over the last 15 years, as I've been financing infrastructure, and I've backed several African entrepreneurs, one of the things that differentiates them is their ability to raise a very early stage tranche that enables them to be able to attract some additional capacity and just to have credibility. Now, again, how do they attract that capital? It goes back to the level of partnership. So whether they're able to get some sort of very respected leadership figures of that country to be part of the team, either by being an advisor or being an early stage investor. And I always speak about one of the projects I invested in, which was an infrastructure project, an offshore cable, where the sponsor, actually a woman, was able to raise the early stage funding amount from Nigerian HNIs, and it was in the millions of dollars. And that's very unusual, and I think it's difficult to replicate that, but you do see a lot of you see the capacity of certain countries, like in Nigeria, where people are able to get some early stage funding from HNIs. And even in the VC community, you're seeing a lot of HNIs being that first check that goes into the startup environment. So the question is how to institutionalize that a lot more. And even if it's not institutionalized, how do you create an ecosystem of that that's more robust? And how do you actually translate that across Africa as well? And is it possible for other African founders to be able to leverage not only on Nigeria's ecosystem of HNIs, but to also develop their own HNIs? Something that's happening in Nigeria that's also interesting is small pools of funds being set up. So you have Rising Tide, for example, that's for female entrepreneurs. And there's small groups of aggregation coming together to support with early stage funding. So things like this are very important, but it's not the end, it's really just the beginning, and it's just one of the ingredients that goes into that long runway of capital raising.
Excellent. So it's really about building an ecosystem. Some angel funds could be in that ecosystem, a deeper stock market, maybe government taking the leadership in bringing HNIs together to say, take a look at this sector and see if you could play. Nigeria tried that with a few companies. I don't know how well that's worked, but just to try different things to see if we can plug the funding gap. But what else would you like to see, Sandra? What else would you like to see happen that would help bring more funding, to startups? Mindful, yes, that there is this information asymmetry that could limit how much money comes from internationals to African founders, but what else could, in your experience, could happen to close that gap?
Okay, thank you very much. I think it's important when I speak to investors, right? I always ask them, how do you define impact investing or impact? And they say to me, impact investing is, allocating money to a company that has a social economic good to generate some sort of financial return. And I say to them, impact investing in Africa should be localized to this. Impact is investor money pursuing African companies today, not tomorrow. And when we do that, we are looking for companies, African companies with indigenous thinking that can crack energy problems. We want our African companies to solve African energy problems. So this is not something we pay lip service to. We need to call out investment firms, impact investors. How are we able to ensure that they are publishing their diversity figures? We want to know how many African-led companies you are investing in. And we want the media to actually begin to raise alarm bells and talk about those companies who are increasing the diversity numbers and those who aren't. And what you will have is you would move away from crowding out African companies and bringing them in. And I think with this kind of intentionality, right, we will begin to bring African companies at the table and not leave them behind in solving the African continent's problem.
Fantastic. Yeah, we can clap, and I hope someone's tweeted that new definition of impact so that I can use it later. Alex, I'd like you to, and after this I'm going to come to the audience, but I'd like you to speak to probably a role for associations. Is there a role for different companies that are working in the same space coming together, and that association then helps to bridge this information gap or bring some level of credibility, to people who are part of their network that makes it easier for investment to flow to them?
Yes, Patrick. To be very honest with you, I would say there is a very huge role for associations where there is equity, there is fairness, and everybody play on an equal playing ground, right? For many of you who would recall when these conversations of mini grids, started 2016, there was this conversation about bringing Nigerian developers together, having an association. A lot of you refer to me, President, Mini Grids Association of Nigeria, and so on. And over a period of time, that fizzled out for a reason, right? So what I say to this question is, we all know the impact of aggregated interest because we've tried it, during the early stage conversations. Is it in our engagement with REA? Is it in our engagement with NEC? Even when we had to pin out some concerns from the regulator, that in the near future, these were things you guys didn't capture, and we think it would affect our investment, it will affect investment confidence, and a whole lot of other things. But we have not been able to see a very robust association that aggregates interest. What has happened is this. Some people came from Kenya. They represent specific. No, I won't be specific, but it's important I state this so that we put these perspectives very clear. There is no country today in Africa that you cannot find a small fulcrum of association that galvanize interests of local people. What the funders needs to be doing is going deep into these countries and identifying the local associations that aggregate this interest. Not looking at a body that sits somewhere and gives figures and makes decisions for other countries. That's in its place. That's why I talked about equity, fairness, and fair representation. And we can get the interest and what we are looking for.
Fantastic. I think the point is well made that there is a role for associations in aggregating interests. And I think Olon could be a good example of a body that has tapped into that. But let me open it up for audience questions and comments. The unfortunate thing is that I'm blinded by the lights. Okay, I see a hand, probably about the 4th row down. Another one closer to the front. 2, yeah? Okay.
All right, thank you so much. My name is Shegun Adaju, President of the Renewable Energy Association of Nigeria. It's a comment just to emphasize the role of associations and clearly what Olon is doing. So we are funded by Olon. Got an office for us, pay salaries of some of our secretarial staff, and we have seen that most of the investees with Olon, majorly, are members of REA. So you could set, a template, just like Alex has mentioned, as long as it's fair and, equitable, right, to support, local associations, and use that platform to identify local players that can be invested in. my comments.
Thank you very much, Shegu. I saw a hand. Oh, yeah.
Hello, my name is Geoffrey. I run an energy startup in Uganda. My question is really about the domination of renewable energy or energy investments by the big boys, to say the least. So if you look at energy, it's predominantly big funds that invest in large infrastructure projects, and there's a lot of money on that front. So mini grids and larger projects, right? But on the smaller, on the seed, pre-seed, or between
levels,
on the lower, anything below Series A, there's, I think, an underinvestment gap where you find that a lot of the startups cannot really cross that gap without finding, for example, energy investment, right, at the early stage. But also, energy is so technical in terms of implementation that you need someone who is seasoned to invest in you. So at that early stage, you don't need just money, you need seasoned money, or more like experienced angel investors or early stage investors. And I think it's probably something you'll hear from a lot of the early stage startups in Africa, that crossing that gap is always a hard thing because a lot of the money is at the top. And for you to access that money, you need to get that early stage investment.
Sure.
Yeah.
Thank you very much. Towards the back. Okay.
Hello. Thank you very much. So I will say a bit about two things. First, I will talk about what he just finished saying. I think if you look hard enough, you'll find there's different levels of investors for different levels of your business. And I can tell you that you can find investors actually that can give you even $50,000, $20,000, I mean, up to 100. I mean, so I think you just have to look right. And I think Uganda is a country that I even get jealous of sometimes as a Nigerian because most of the money is going to East Africa. So
maybe just to deepen that comment,
yeah.
How should he look?
I think it's also about the right, it's a good thing you're here, it's about the right kind of associations. So coming back to what I was going to say, try to look for people in this space that you're in now, talk to investors. I mean, okay, maybe you can come talk to me later and I can tell you a couple of people I know. I don't know what space of renewables you're doing, but there's a company like Charm Impact. I don't know if he's in this room. And yeah, I mean, start from there. There's some fund that there's so many of them you can talk to.
Excellent.
Okay, so talking about associations, and thank you for bringing this about barriers to, I mean, I started my business about 13 years ago, and I know the barriers that I've faced and how with time it's kind of fizzled out. And on one hand, the fact that I got used to how to climb the mountain, and on the other hand that, okay, the mountain started, like leveling down. Out. Yeah, but I think I kind of feel a lot what Alex's pain is, because it's not that we do not get support. It is the kind of support. Most times we get support to pilot projects. We get support to do things, like make it look like it's going to happen. And then when it's time to move it from pilot to scale, that is where the problem is. Then you see some other company coming from abroad where maybe, I'm not saying because they are, foreign or white, or it's not about the skin color, it's mainly because maybe it is their country's money. So they feel more comfortable supporting them. And that's when they make the millions of, investments. I'm not saying that there's totally no black company that gets some sort of funding, but where one black company gets $10 million, 3 more of foreign companies will get maybe 30.
So what could these African-founded companies have done differently such that by the time you move to implementing and scaling, they would have been the choice or part of a pool that would then scale? I
would say that as is, most companies are already doing what is right? But I think it's also the eye that is looking at them. So, for example, I mean, it's like playing with the big boys kind of thing. in the long run, you find that you must have to have an association with, not just association within the country like a RIAN or a Renewable Energy and Energy Efficiency Alliance, but more like have an association with an organization that's based abroad. Then that way you can actually scale. But why must it be that way, I think is the question that we're asking. Why can't you look at me and feel, you are an African-based company, you can do this business and you can actually scale it to whatever it is if I give you this much money.
Thank you. Yeah. Thank you very much. To the back, I see a hand at the back. Oh, you already have the mic.
Yeah.
Okay.
We'll take that one and the last
Good
one.
afternoon. Okay, my name is Chiokusumes Dora from Oxano Solar, based in Nigeria. Okay, so my little comment to that is, one of the things I think that African founders can do based on association is not just the regular association thing, just like what Olon and Odyssey are trying to do with the debt program. Companies can see how they can come together informally, aggregate their orders. That way they can get better pricing. You know, part of what I see that happen, and sometimes I think that's part of the problem, is that we put a lot of structures and processes around everything. Part of the reasons why I succeed is just like Sandra said, growing up from the ground up, I know how to hit things direct, take out the excesses. You know, when Olon came, the first place Dr. Weber came, one room office, he looked around, you know, he laughed. So if you look at that office, you will not invest in us. So, but you need to look beyond the office and look at the content of what we are saying. I may not be able to deliver a speech like somebody that went to Harvard, but, you know, but I know the nitty-gritty of what I'm doing.
That's it.
You know, so when it comes to things, I tell people this, I say, like we manufacture solar panels. I tell people this, I say, when it comes to solar panels, we know a lot about it by active participation, not by going to school. You know, so those things are also important. Let them also begin to look at founders through what they've done actively, not classroom experience. Many of us don't have that, but we have active experience, which is key to winning in Africa.
Fantastic. Thank you very much. And there's a comment from the back.
Thank you. Thank you very much for giving me the floor. I just appreciate this. I'm Linus Mover from the Economic Commission for Africa. We, together with the Sustainable Energy for All and the Africa Energy Chamber, are putting together an initiative which aims to do exactly, or hopefully solve the problem, the concern that I hear. It's called Team Energy Africa, and the idea is to bring Africa's private sector and Africa's capital to take the lead in investing in the energy sector in Africa, and also to promote the idea of local content also in terms of investment. Because we've been hearing local content in terms of project development and so on, but local content where Africa's private sector can be able to work with member states and invest across borders in Africa. Hopefully that can give the opportunity to.
Thank you very much. I think someone's got a microphone here, but I want to hear from the lady behind as well. So there's a microphone in front, right? Gone. Okay, the lady behind.
Sorry, I'm a founder of Mobility for Africa. So I'm a foreigner, but I'm working in Zimbabwe. And I just have some few observations, because I agree with we have to do a lot more to get African entrepreneurs support. And just quick observations. We also have geographical discrimination. So East Africa, as we know, gets the lion's share of startup money, and I'm happy some of it's going west to Nigeria. But north of the Limpopo, there's nothing. So just to say, we have to also educate people that there are 55 countries in the continent, not just 4. And we also need, when I entered this space, there's a huge investment going into capacity building. I came from the UN, where I got very cynical about capacity building. And I think I can feel the frustration, because people offer accelerators, but really what you need is finance. So I think some of the funding that's just being focused on building an ecosystem should instead focus on educating some of our African governments in what startups are, because that's been our challenge, having the right policy incentives, right, having the regulations. And finally, just to say that I think it's not just funding African entrepreneurs, but it's funding R&D. As Sandra said, we need to find investment in solutions that are African built, and I don't think enough money is going into that.
Thank you very much. I saw the microphone come back, so I'm ceding my concluding remarks to you. But you've got 1 minute.
Okay, thanks. My name is Faisal. I work with Cross Boundary Innovation Lab, and very happy that this conversation is going on here today. Some of the work that we do is actually tailored around, looking at this specific problem, hearing from local developers and, financiers alike, and getting a good sense of what the problems are, and then potentially, factoring what the solution could look like across the continent. I think, I had one question. Okay. No questions. Maybe I'll just chat with Tari.
So I'm sure the panelists will stay on after the session, and we can.
So thanks for a very passionate session. I appreciate the candor and honesty, and it was amazing. Thank you.
Thank you very much, and just to thank everyone for coming to this session, most especially Olon, for the work they've done in Nigeria, but also for thinking that this topic is important, and I think it's really important. There's a study that was done by Village Capital and Victoria Partners that speaks to this issue. It's really an information asymmetry problem, and I think that one route would be for an association that tries to find ways to bridge that information gap, to ensure that when these funds come in, that African founders, increase the share, they get of that. And on that note, I thank everyone. Please, another round of applause for the panelists.
Thank you so much, Patrick. Oh, sorry about that. I know that a lot of you had questions, and so for those of you who didn't get the opportunity to ask, the panelists are here. We'll be preparing for another panel happening at 3:30, but please feel free to either ask them here or outside at the foyer. Thank you all.
Thank you.